My name is Dominique, and we'd like to welcome you on this discussion on Applebee's Lithia Springs. We have our two hosts, Dave and Andrew, and helping drive this live stream, we have Natalie. All right, folks, first and foremost, Greenleaf Connect's mission has always been to be direct, informative, and really to provide transparency across our organization, specifically with an emphasis on our new deal launches like this live stream today. Live streams are open to the public, while private Connect events are more intimate and interactive. Before we begin, we just want to give some friendly reminders because it has been a while throughout this holiday season. First, you do have the option to change your presentation view. You can click and drag to make the screen bigger or smaller, or you can change it to speaker spotlight view. At the very end, we will have that Q&A session. We kindly ask you to use that Q&A feature located at the bottom of your screen, and we'll use that to facilitate the conversation. Lastly, this live stream is recorded and will be shared with you by the end of the week this week. So we just went through our rules of engagement. Really today, folks, we'll be discussing the Applebee's Duluth case study, a recent exit of Greenleaf's, and then we'll dive into the Lithia Springs opportunity and then end with that Q&A portion at the end. All right, without further ado, I will pass it over to our hosts, Andrew and Dave.
Welcome, here we go.
Yes, we got another one of these Applebee's, so thank you, Dominique. We're very excited, one, about the brand and about the traction we've had with Applebee's and continuing to find opportunities. But first, we wanted to touch base a little bit on what we did with the Applebee's Duluth and how that all played out.
Duluth ended up being a home run. It was a phenomenal deal. Number one, it was our first Greenleaf Applebee's that we did, although I did an Applebee's before this. But great purchase. We purchased it at $2.6 million. Roughly, it was a 7.7 cap when we bought it, I believe. We got a lease extension during COVID, so we got a lease. It was approximately a 4 to 5 year lease term left. We got 7 years extended because of the lease discount we gave the neighborhood restaurant partners, which is the franchisee, and we ended up getting it. We sold it with an 11 to 12 year lease, and we sold it at a 6.5 cap, and it was a home run. It was a 20+% return on investment for our investors. So it's a great story. And not only that, but we know it's a reproducible story because right now in the market, as you'll see on our comps page, Applebee's are selling for mid-6s. And even now, since we've made that page, cap rates are also going further down too. So when we sell this, the trends continue. In theory, we're going to sell this for less than a 6.5 cap, which will improve the price.
Yeah. And in this, the value add here was adding that term to the lease. So we're going to add value two ways on this. One is we get higher rents from rental escalations, or we add term to the lease, and that's where we really can create value. We were able to trade a lease concession for term, which helped us get a lower cap rate, along with the market improving too.
And all of these deals, all the triple net deals, the value of the deal itself. There is some value in the real estate, but the value of the deal is actually the lease itself. So the longer the lease term, the more valuable the property.
Yeah. So Duluth was a success. Now we're going to take a look at the Applebee's Lithia Springs opportunity that we have today. This is, like Andrew mentioned, this is our fourth Applebee's that we'll be going through. It's right here outside of Atlanta. So Lithia Springs is a suburb of Atlanta. So the highlights of this deal, we're paying $2.7 million, a little bit right in line with what Duluth was on the price.
Right.
And we're buying it at a 7.3 cap rate going in.
Correct, and it's way above a market cap rate for where typically Applebee's are trading for. So we're already buying it literally day one with value.
Yeah,
and
because we sold Duluth at
6.5.
6.5.
Yeah.
So we're buying this at 7.3, same Metro Atlanta.
Yeah.
Area, and this is it's an absolute triple net. Right? It's
yes,
not double net.
It's one of Mark Buchanan, our chief of staff's. One of his favorite deals because there's very little for us to do. There's very little. He doesn't have to staff it very much. We have an accountant, and basically that's it. And that's how we watch it. Of course, we visit the property, make sure it's still intact, make sure we're taking care of it. But it's a very low impact, low managed deal, and so they're very easy for us to take on.
And a highlight here too, as we look at the remaining lease term, it still has 9 years.
Yes. So there was a lease extension already implemented on this one. So we already have 9 years of term, and even better, we'll go into this later too, but we're getting a lease bump in year 3.
Yeah.
So and that's the
it
other
already has built-in value that we're getting. So we feel like we're buying this at a very good cap rate. We know we have built-in value going into it. So we're excited about the position here as a whole.
And don't forget the franchisee. I mean, the franchisee is a mega franchisee. It's a local company called Dine Equity. Actually, I'm sorry, not Dine Equity. Dine Equity is the franchisor of Applebee's, but there's a company in Atlanta, which is based out of Buckhead, called Oregon Capital. They own a bunch of brands, including IHOP, or they franchise a bunch of brands, IHOP, Applebee's, John Deere. They actually own On the Border and Planet Fitness and Sonny's Barbecue. And On the Border is right in Buckhead, right where the old Toys R Us is.
We'll see if we can get one of those. I like that restaurant.
You like On the Border?
But if we look at Applebee's, we played that video kind of at the beginning. That was, in this past year, that song came out and really kind of added a lot of interest and hype to Applebee's as a brand. And here we have, they've been in Rolling Stone for that. They've gotten a lot of positive press.
Literally, the silly social media video changed the perception of the brand. So, I'm assuming there's a lot of singers who try to implement brands inside their songs, just say, hey, maybe one day this brand will pick up me as a commercial. This was that, and it just went bananas. It is all over the internet. For those of us who are on social media, TikTok, YouTube, whatever you play with, this is all over TikTok. Walker Hayes this is literally, I think his song called Fancy Like has changed his trajectory for his career itself, and also changed the impression of the Applebee's brand, because Applebee's is a mature brand. I mean, what do you know Applebee's for?
I was joking around that, Applebee's, you can find people going on a date night there, college students, families, and then just guys drinking at the bar.
And they're all probably drinking. Hopefully the family with the toddlers is not drinking that much, but but there's college guys pounding beers next to a family having dinner. And the unique thing about this Lithia Springs Applebee's, which I forgot to mention before, is that Applebee's, which it's very important, we forget this, but Applebee's is a restaurant bar.
Yes.
Yeah.
And it even says it in their logo.
Right.
Their brand is.
So how many places can you go and actually get a decent meal and go get shots of tequila?
So if we look at the map we have up here, the Apple is obviously where Applebee's is. This is west of Atlanta, and you see this right off of Highway 20, which is the main artery that's coming in from the west side of Atlanta into downtown. And you just see all of the other brands that are right off this exit, but most of these are not the combination of the restaurant and bar kind of thing. You've got Dunkin' Donuts or a Zaxby's, you're going there specifically for food, and there's not another alcohol option that's on kind of the surrounding market.
Well, there's another good story about this one. Literally, there was another source down the street, Ruby Tuesday, and Ruby Tuesday is now dark. And so literally right down the street, their number one competition is no longer there. So all the business there moved to our location. And remember, our location, this is what was the statistic we found out? How much of it is curbside and delivery?
Oh, yeah, and it's impressive. They've shifted about 30% of their business to curbside.
Yeah, it's crazy. 30% of their business is now.
Yeah, so even when you think about entrenched brands that have Applebee's is definitely since inception a dine-in restaurant bar, and even in the past 18 months, they've been able to shift that operational strategy, and now they have 30% of their business coming from takeout.
Whether that's curbside delivery or everything.
Yeah, food that's being consumed not in the restaurant, whether that's a DoorDash thing or.
And they love that business because the margin on that business, there's no waiter, there's nobody cleaning up the table, there's nobody cleaning up the bathroom for that revenue. So it's a lot nicer revenue for those.
Yeah, and they've been doing well at it. Yeah. When we look at the sales and comparables for this Applebee's, we're always looking at what else is going on the market for any brand of asset that we're buying. And here you can see we've got a couple as we go from the top down. So we've got some different icons here. The star on Lithia Springs is one we're currently buying. Then we've got the lighter green leaf, which is the Seneca Applebee's that we just purchased for a 7.75.
Because Dominic, was it last week?
We closed out last week, and the dark green one around Duluth is one that we sold.
Right.
So, and then the rest of these are all comparables in the market that have transacted recently.
Right, and you could see the comps. There's one 6.7, but for the most part, they're all going to be in that mid-6 cap range. And the trajectory of all of these cap rates right now is also further down. And so as the cap rate goes down, the prices are going to go up.
Yeah, and we're not just taking ones that make our numbers look good. These are just all the ones that have transacted in 21.
Yeah, yeah.
So you can see where, the Senate one was a 7.75. This one is at 7.32 that we're buying it, still well above
Yes.
the average that's out there.
Right.
So we're definitely very excited about where it is. We think about the investment overview, right? So we mentioned we're buying this thing for 2.7 million. It is full triple net, but there's nothing to do on the front end. We don't have any capital improvements that are going into day one.
No, we inspect the place, we make sure the roofs aren't leaking, we make sure the tenant is taken care of. This one has actually been upgraded. I personally have a relationship with the local district manager, and I went and talked to the store manager, and I know one of the guys who works at Argonne Capital who actually manages this deal. So this is also piggybacking on existing relationships that we have. So we're able to determine the success of this restaurant because of the relationships we have with the franchisee. And because of that, we know that, okay, this is a good performing store, and there's no, they just signed an extension, a 5-year lease extension to extend it to 9 years. So Applebee's or Neighborhood Restaurant Partners, who is the franchisee, they know this location is going to be there for the near future because of its historic success and its recent success too. It's actually done better in 2021 than it did in 2019. So 2020, we all know is a wash, but they're actually doing better than they did in 2019.
Yeah, it's definitely impressive. The point we always like to mention here is year 1 to year 4, right? So you talked about that it's a 9-year lease.
Yeah.
But coming out of year 3, we have our first rental increase
Right.
already baked into the lease. We don't have to go try and get it.
We get a 10% rent increase already there, nothing for us to do. And year 3, our gross rent bumps up 10%, and which roughly we go from a 7% cash on cash, just literally beer money in your pocket. I'll talk about beer money one day because it's actually real money in your pocket, not the overall investment return. But you're going to actually go up to an 8.7%. And with the total investment return, just in probably year 3 or 4, you're talking 13% just on the cash that you invested. So essentially, if we never sold it, it would be a 13% return if we just kept on operating it without selling it.
Yeah. So,
but when we sell it, of course, that goes up.
Yeah,
we'll talk about that.
We'll look at our hold period here because we're always projecting some form of terminal hold period, and here we're saying once we realize that rental increase, we go into year 4, we have our new rents up 10%. Even if we sold it at the same cap rate, we're making money, and we project we're selling at a lower cap rate.
Correct. Oh, actually, we conservatively always estimate some. We conservatively estimated 6.5 cap, which is a conservative
Which is
estimate.
just what we did on the last deal.
Right, but if we sell it at 6.3, 6.4, 6.2,
It
just gets better.
So when we think about this Applebee's and the foot traffic that we're seeing going in and out. So we mentioned that 30% of their business is not necessarily foot traffic anymore. It's leaving.
It's leaving the store
right
real quickly. And you love your placer data, so let's talk about the placer data.
We or Placer in itself, when we look at data information on how do we assess how a store is performing, and you mentioned that we're talking with the franchisee, we're talking with the operators, we're talking with district management to see what do they think on the performance here, and are we getting a good stable asset, and then we're verifying that.
Right, because we're trying to
grow there.
I mean, ultimately, our risk is the tenant doesn't stay there, so we are controlling that risk as much as possible. And when we know the tenant wants to be there long term, as far as an indicator, that's the best indicator we can get that the tenant wants to stay longer.
Yeah.
So,
and the foot traffic here on this one, 68 percentile within 5 miles.
right. So we took the entire 5-mile radius of all the restaurants. I think we actually took all the restaurants, not even the restaurant bars. So all of the restaurants in the area, and this particular location gets 60. We're talking about percentile. So if we were to just line them all up, this Applebee's is in the 68th percentile of the foot traffic that goes into any restaurant in this radius area. And if you're looking at just the 50-mile radius of just Lithia Springs and this Applebee's, there's roughly about 30 Applebee's in this range. And this store is also in the 65th percentile of just comparative to other Applebee's. So you compare it to other Applebee's, and then you compare it to local restaurants, and it's in the top 3rd quartile of performance. Basically by feet.
And that's really our strategy is when we look at a bell curve, right? So if you envision the bell curve that's going down, we want that top third quartile of performance, really any category that we're looking at.
Yeah.
And this one has that. The other notes here, 2019 and 2020, the average unit volume at Applebee's as a whole, this store is outperforming all of those averages.
Yeah, the average store it was a 2.4 million, and then this one it's going to be at if not above 3 million, right at 3 million. So it's doing phenomenal.
Yes, it's a strong performer on that front. Yeah. So we look at cash flows. So ultimately, we take a deal that we're buying it at a strong cap rate. We're investing about $1.1 million. We say, okay, what do the cash flows look like that come out of that? So we put money in this deal. Typical investment of say $100,000. These are the cash flows that we're projecting out through year 1, 2, 3, and 4. And you can see in year 3 is when our rental rate bump.
Right. So that's when we get our 10% in rental. But this is, by the way, this is the second line is the return after we're paying our debt. So you can see that our overall income goes up about 20K in year 3, and that's because we basically got a 20K rent bump. So if you're getting 20K on top of a $200,000 rent, it's roughly 10%. But when you're talking about overall NOI, you went from 70,000 to 90,000.
Yeah.
That's good. That's more than 10%.
And that's baked into the lease, so we don't have to negotiate that. That is one of the key value plays here. And then we're saying year 4, if we look to exit in year 4, we've received that rental rate bump, and now we're going to say, okay, we can exit with higher revenue, and we're targeting a 6.5% cap rate exit, which is exactly what we sold to Duluth at.
Yep.
And that's what generates total deal IRR of 17.3%.
And also, assets like that Duluth asset right now are selling for lower than a 6.5 cap right now.
Yeah.
So
the average on there was 6. Yeah, there were lots that were in the 6.3 range that sold as well.
But as we get below the 6.5 cap, we could say this goes from a 17% to a 19% to a 21% deal.
Yeah,
I'd like to be on that side of the exit.
Oh yeah, that would be ideal.
Yeah.
So okay, so that kind of wraps up where we're at on cash flow for this Applebee's. We're going to turn it back over to Dominique. We're going to go through some upcoming dates, and then we're going to handle any Q&A specifically on this deal.
Yes, thank you, Andrew and Dave, for sharing those Applebee's Lithia Springs insights with us. We are rapidly approaching 2022, everyone. So I know.
It's a couple of days.
Right, in less than 2 weeks. So before we leave, we would like to leave you with some upcoming dates regarding Applebee's Lithia Springs. You will be given your subscription agreement around early January, and then we kindly ask for your subscription agreement along with funds due by late January, all in preparation for a late February closing. Again, we will be sure to provide exact dates as soon as we approach a little closer, or at least get into 2022. This is a friendly reminder that we, Triple Net Holdings and the retail sector of our business has been rocking and rolling. Taco John's is fully fundraised, and there are very limited positions for Family Dollar. So if you are interested, please do not hesitate to reach out, and we will be sure to help. All right, without further ado, I will bring Natalie to help us with the Q&A portion of this broadcast.
Great, thank you, Dominique, and thank you to everyone who submitted questions to us today. We want to remind you that you can continue to use the Q&A feature at the bottom of your screen to submit questions as we work through those that have come in so far. So first, can you highlight the background of the operator for us again? And is there a personal guarantee?
Want me to take that one?
Yeah.
Okay, so first of all, a major corporation runs this. It's the franchisee, and we calculated the number of restaurants. They own about
I think it's like 700.
Yeah, it's 700 throughout all their brands, and I think I wish I knew this off the top of my head. They own, I think it's 100 and something just Applebee's themselves. Yeah. So just the Applebee's brand, and so it's a major corporation. Personal guarantees when a company owns 700 restaurants are few and far between, but it is a corporate guarantee, which is probably actually better than a personal guarantee because you have the guarantee of the actual corporation behind it rather than the individual net worth of a person. So this is fully guaranteed by the corporation.
Okay. Would you review the lease terms for us again?
Lease terms. So there was a recent extension. We have a 4-year term right now with a 5-year extension. And so this takes us about roughly 9 years. And so we're buying this deal with 9 years remaining on the lease.
That leads us to our next question. With the already existing long lease term, where is the value creation?
Well, year 3,
Yeah, year 3 is the rent bump that's already in place. That's really the big value point, and that's why we talked about a year 4 hold strategy. Is we'll realize that rental bump in year 3, and then immediately after that, with that higher revenue, we can say, hey, do we want to take this back out?
and then we sell it with a 5-year term on it to somebody who knows it's a good performing asset, and then
Yeah, 5 years is still very,
Yeah.
very good term left on a lease,
So-
especially of this caliber with this brand.
investors had 4 years of cash flow and then a nice check at the end.
Our last question for you, can you review the debt terms with us?
Debt terms.
I don't think we didn't touch, that's a good question. We didn't touch base on
I
those.
forgot that one.
We're buying it for the 2.7,
2.7.
putting 1.1 million of equity in it.
Right, and that's roughly that we're getting a 65% loan to value loan. So we're borrowing 65% of the cost. The interest rate is 3.65%, and it's going to be a 25-year amortization cycle.
Yeah, and this is with a institution called Truliant Federal Credit Union.
Yes, which financed many of our triple net deals, and so it's a very easy, it's an easy loan. It's a known lender. Every time we do doing a loan with a new lender, it's
Yeah, and putting new lenders in place are hard, but Truliant has been very good. We've done
over 10 loans with them now.
Yeah, and they've been a big part of our continued growth throughout 2021. So we're excited about not only doing this with Truliant, but looking at future deals with them as we have a pretty good process. It's a fair loan. It's not, it's not insane on it's not all interest only with 30-year amps.
Yeah.
It's it's a fair loan.
It's a
That's
good bread and
We're
butter
excited about it.
loan at a good interest rate, I would call it.
Wonderful. Well, those are all the questions we have. Again, we want to thank everyone for participating. And of course, we want to thank our hosts, Dave and Andrew, for sharing the details of our new Applebee's deal with us. As we wrap up, we'll pitch it back over to Dominique to leave us with our upcoming dates.
Thanks, Natalie. Thank you so much for joining us today. We will leave these dates up for Applebee's Lithia Springs subscription agreement, funds due, and scheduled closing for the year of 2020. And then again, this is a friendly reminder, if you are at all interested in our Family Dollar offering, please do not hesitate to reach out. Again, thank you so much for joining today. Typically, we would go over our Greenleaf Connect schedule, but again, 2022, oh my word, is approaching us. So we're going to take a slight break, but we had to slip in an Applebee's Lithia Springs update for you all. Don't forget to check out our Greenleaf Connect YouTube channel for all of our recorded live streams, with this recording being made available by the end of the week this week. Well, this concludes our broadcast. We will stay online for a couple of moments or so, but in the meantime, we certainly appreciate you joining us today, and we look forward to having you on our upcoming live streams. Thanks again. Have a great day.
Thank
Bye-bye.
you, Dominique. Thank you.